Is, the Fed continuing to backstop equity markets, going to end in tears at some point in your view?
Yes. But I don't think this negative rates thing is about backstopping equity market. I think it's more born out of necessity. The problem the Fed has is that interest rates are at zero, 10-year treasuries call it 50 basis points, and we're going to enter into a period of quite pronounced deflation in the US economy. Deflation in the US. And that's because the inflation rate is largely driven by the economic cycle. And we know the economic cycle has been curtailed because of what's happening with the virus. So we're going to have deflation in the US of somewhere between 2 and 4% over the coming months. And the problem is when nominal interest rates are at zero and you get deflation, it means you get rising real yields. Now, the economy is driven by real yields, not nominal yields. And so the problem is, we're in this terrible situation where we've got really weak growth and we're going to see rising interest rates in the US. So the Fed needs to counter that somehow. But the problem is they have limited tools now. They'd like quantitative easing, but as I said, interest rates are 10-year treasury only 50 basis points. Moving them to a zero is going to do largely nothing. They're doing all this funky stuff with buying ETFs and high yield and stuff, but that's largely throwing that's trying a lot of liquidity at what is ultimately going to be a solvency issue. So now they're thinking about cutting interest rates negative. And I think it's a great idea. And they should do it the way Rogoff talked about in his Product Syndicate article of the weekend, is that they should do a short, sharp shock and take rates to -2 or 3% quickly and force the financial institutions to have to deal with it. And it's not dissimilar to the reasoning for not doing it now as the RBNZ have. They need the banks to be ready, and the banks in the US are not ready. But I'm sure they're working with the banks to make them ready were this to become an eventuality.
One of those tools they do have left in their arsenal is just rhetoric and the mouthpiece. And that's what Fed Powell has effectively been trying to do, is trying to push that message onto Congress. We want that fiscal assistance. He's doing everything in his power, it would seem verbally, to avoid those negative rates. Just how long can he keep trying to play that game?
I think Powell has zero credibility left now anyway. Yes, we need fiscal, but fiscal is, as I said, it's a stopgap. It's a liquidity issue that isn't going to affect the long-term solvency of these companies. They're still going to go under. And also, how much more fiscal can we do? I mean, yes, there'll be an infrastructure package, and there has to be a few more after it, but we're already staring down the barrel of budget deficits of 20% in the US. I mean, you can throw more money after it again and again and again, but it's the same old thing. It's like we have this growing problem in the US since the GFC around quantitative easing, pushing up financial assets and benefiting Wall Street, but not helping Main Street. And they're doing the same again. And that's what's happening now. You've got unemployment of north of 15%, heading to 20% in the US, and the S&P is not far off all-time highs. This disparity needs addressing at some point. And by doing negative interest rates, it actually helps Main Street, and it kind of hurts the richer demographic part of the population. So it works in a number of levels. Obviously, the lobby groups and the banks will be strongly against it, and people will have a tough time getting their head around it. But ultimately, when you realize that real yields in the US have been positive and negative a lot of times over the last 50 years, well, it's not that much of a departure anyway.
Well, Vimal, Donald Trump, the US president, would be happy to hear your reasoning on negative interest rates. He's definitely in the pro camp. What's a time frame? I mean, you say that it should be done. It should just be, do it in a snap reaction, get things going, get things moving. So, when are we likely then to see this coming to fruition? Likely,
well, we're going to see the unemployment numbers get worse in the short term. We're going to see the deflation numbers. We saw CPI this week, which was bad. We're going to see that get materially worse over the next few months. So the time is now. Whether operationally they can move before year end, I'm not too sure. The RBNZ gave the banks till the year end to fix their problems with operationally be able to handle the negative interest rates. It doesn't mean they can't pre-announce though. And ultimately, whether the Fed does move to it or not, the fact that they're considering it is what's important here, because the markets will now start pricing it. As we saw this week, the market started pricing negative interest rates already in the US. And that opens up a part of the distribution that hasn't existed before. So therefore, now it means that the market will now price positive and negative interest rates. Whether the Fed actually delivers on them or not, it's important, but the market was already start to price it. So that's a really key thing. The fact they're having these discussions is material, and given the fact they didn't want to counter the idea of negative rates just a few months ago. I think it's a bit about the problem, the way they introduced negative rates in Europe, Japan. They did it incorrectly with hindsight, because they did it too slowly. And they did it too weakly and too slowly. So they cut rates a small amount, sub-zero, then they increased it a little bit, and a little bit, and a little bit. And what you do is you don't deal with the underlying malaise in the economy. And what you do is, therefore, you get the problem still there. You get the back end of the curve rallying, the yield curve flattens, which crunches your banks, and it destroys credit creation and makes the problem worse. But if you're to go in and move interest rates quickly and materially negative, we should hopefully not have those problems, because you force the banks and financial institutions to lend money, which is ultimately what the whole point of negative interest rates is.